focusing on big retailer Target, symbol TGT. So let's take a look at this one. And of course, if you've been following this name for any particular amount of time, you know that the stock has just been hammered over and over and over again. Every single quarter, the stock reports poor earnings, and the stock just gets hammered and drilled. And more recently, it hit the bottom of the barrel probably in the beginning of October. We could see that about $103, $104 level, but it went sideways for a bit, and you can see that that sideways motion here for about 6 weeks here put in a nice little base on Target. And then when they reported earnings last month, stock popped the day before, and then the day after earnings, it really took off here. But what's really impressive here to see is how the stock has held that gap up and that range that it had on earnings day, and continues to make some higher highs and higher lows. Now, clearly, we see that the stock has hit some resistance there at the 200-day moving average, and that is going to present some problems trying to get through. And of course, that kind of lines up with a little bit of resistance from this area as well too. It's from back in June. But we like the fact that the stock is making higher highs, higher lows. It is blue candles on the go, no go chart, which is strongly bullish. We do see the MACD, which pushed out hard following that big move up, and is starting to flatten out a little bit. It simply means that the stock is probably pretty tired after a big strong move over here. We do have earnings coming up in February, and of course the holiday season, shopping season is in middle gear right now. We're still going strong for the next 3 weeks. And then Target is usually a pretty big beneficiary of gift card redemptions, which comes out in January and February of the new year. So let's take a look at the other indicators as well too. The Chaikin money flow has been very, very strong too. And again, this is a signal that big institutions jumped into the name last month, and they're not selling it, because you can see Chaikin money flow is still resting up here at a higher level. The TDI at the bottom here means relative strength is doing well as it relates to where Bollinger Bands are placed on the chart. And then finally, the parabolic SAR, which is the dots right over here on the top pane of the chart, are still reflecting bullish as well too. We do have an impending bullish crossover here with this 50-day moving average crossing above the 100-day, where the 200-day moving average is, right, of course, is the resistance, but we vaulted above that 100-day moving average on earnings day, and we've stayed above there. 50-day moving average is about to cross above that, so that would be a positive development for Target. So where do we think this is going to go? I think that this has got a chance to get back to those old May highs. Let's call it about 162 over the next 2.5, 3 months. They put some good numbers together. The margins increasing, operating leverage increases as well too. All these are fundamentals not related to the chart, but the chart is telling us that there's certainly some more upside to go with Target. So take a look at Target when you can. I have some calls out to January, February, and March. Hopefully we get some good movement on that over the next over the holidays. Have a great day, everyone, and I'll see you guys next time.